So we understand how price creates separate highs and separate lows. So let me just bring that. So we have this low, this high, this high, this low, like that. In an uptrend, as always, there's somebody that decided to be unfortunate today that would do what? Annotate. Without me turning it off, it will just do it. Be like, bro, you have forgotten to turn this off. Let me help you.
Let me remind you.
Anyways, I've turned that off. So what we see here is would expect price to what? Come lower again and continue. The moment that does not happen and market breaks this low, it changes the narrative. As I always say, the fact that I broke this low does not mean it has changed trend. We only get a confirmation for change of trend when it fails to take out this high. So the moment a new high is taken or created, right, that is lower than the first one, it gives me confirmation that yes, the trend is now bearish. All right, so that's the first thing I'm interested in. I want to see that happen. All right, so in that case, what am I doing? When that happens, I'll be interested in what? Looking for sells back to the downside. All right, so that gives me what I call my shift. Okay, just to make that illustration better, just have something like this, create this. So I'm interested in taking shots back down. So I'm interested in all the extreme ranges that will be created. Now the range could be above, it could be below, right? It could be before that break. Now there's something about me. I don't like take ranges that are very close to break, right? So let's say, for example, market did this. All right. Created this low, went up, create a new range, drops, create a new range before breaking this. I always disregard this type of ranges. Or if I want to even use it, I use the lowest risk because I prefer to take extreme, right? I want to see what happens at
Range
the
like
extreme.
that are the ones you take quick 1 to 3
Yeah,
because
if
most
you want
times
to take 1 to 3, you can always get it. The reason why I'm explaining that is to look at this gold now, what the market is currently doing. Why I'm still waiting for 2050, even though it has been selling, I'm like, fuck what it's doing. I'm not interested. I want to sell at the extreme,
yeah,
the best possible levels to short from, which is the extreme. So I do see this as fake move, right? The way I see it is this like a trap. They know that okay, that people will want to do take shots from this level. And because of that, I see this as a big trap in the market. So now let's just analyze because I've given like a clear understanding of everybody should understand higher highs and higher lows already. So if we look at this trend, like I said, this trend is going to the upside. All right. But at the same time, do you want to always take buys or sells because that's the overall trend? Sometimes you can do counter trading, all right? Counter trend. So let's look at one thing first. Going to the weekly, what you see here is every time this high was created, there's a dump, right? So let me bring this back. First dump, second one, third one, then finally.
external resistance or what they call it, support resistance here.
Yeah, it's basic concept of resistance, right? But then again, this is why resistance is very sweet because if you're enjoying it, it doesn't last forever. Now, there's a reason why I say so because if you look at this one now, the moment you're enjoying that resistance, enjoying it, you're having fun. What do you see? If ideally, maybe the first time you put your entry here, right, and then you target this low, it hits your take profit. You smile. You go again, it happens. You go again, it happens. Now, the fourth time, did that happen? Of course not. What do we see? We see a lot of people taking out because there were a lot of sell orders there. Did the market actually sell? Yes, but did it take out everybody selling at that level before it sold? Yes, it did. And that's simple. So you pay close attention to body breaks. All right, nobody has taken out, nobody closed since this level was created. So averagely, if we want to look at it also, averagely, this is like our average low, right? If you're looking at it very well. So this like 50%. Let me get the exact 50%. Manually getting 50%. I don't know why I'm stressing myself when I can just do this and get my 50%. So that's the 50%. So I think I'll just change it to like, yeah, you see it. That's the level with 50%. So now that is why I'm interested. I'm interested in seeing gold go as low as this before we see that break again to the upside. That is 1750. But another factor you have to watch out for is fundamentals. The war, right? The war that's ongoing. That's one thing you have to look at. So this is all on what? Gold on the weekly. Let's just go back to where we're coming from, 23. Now, let's mark out all the possible ranges that have played out. So as always, extremes, right? So we have this last bearish candle, right? But then again, if you zoom in very well, you see that there's another bearish candle. And that's why I look at the next time frame, 21. Now on 21, you actually then see the actual bearish candle to be the one I marked up as the actual bearish candle. Let me take this middle line off. So that's my range. Okay, so I draw that out. Now let's look at it. Before the range was created, there was a high. The break of this high, right, is the shift to the upside. So we look at the last major legs to the downside. We have this low, this high, shoot back down, create our range, break a structure aggressively to the upside. So indeed, price is coming into this level before we expect price to push higher. Now, then again, if we look at this is another range, extreme range, right? That range, we have this low, this high. Was this low taken? No, it wasn't taken before that range was created. And then again, what do we see? We didn't really see price react, but we see this weak reaction into that range. Let me just mark that out, sorry. So we see that this is the last bullish candle. And then you see that. All right. Now I see how price tapped into it multiple times. So the first entry would have been here. Now for overall risk, it won't be this level, like I said. I would always do what? Use mean threshold. So mean my stops will be here.
And that's true, guys. Mean threshold is still gamble. So
Yeah. Is no Gambox is a tool name. Mean threshold just simply mean 50%. So you say if you're taking double of that, your next entry will be here. And your SL will be here. Now, some persons have asked me, why is my stop just on the way? I'm like, bro, if it's going to sell, it should not even get there. So always understand that if it's not going to sell, that will happen. All right. So we have that activated. And then what happens? Price gave a close attempt into this level here. We have this as a close attempt. And that reminds me of liquidity. We want resting below. I want to see sell side. But then again, like I said, you see why I said the middle range is always a trap. You see this one, that those who try to short from here, right? Because they believe that is the actual range that broke structure here. I didn't debate that. Yes, it did. So if we look at this on the 4 hours, right? This is it on the 4 hours. And this refined is the last bull candle, right? Did it actually play out? It did if you took it from this level, right? So let's pay attention to this. Last low, last high, gave the move, created the range, aggressive break, shift here, then price comes back to that range and delivers back to the downside. Only if you take it from that level would you have made profit. So what do I mean? I mean, if you are taking it from this level, yeah, as always, if you would do your mean threshold, you have this last bull candle, your range is this, your entry is this, your first entry would have it stop, your second entry will be active, right? At 50% here. And then what happens? This even gave almost a 10-hour setup. Right, almost a 10-hour, 9.82. Yeah, so if I go to 1 hour, you see it very well. See, that's a clean entry. Was there also inducement? Yes, there was, but that's not the reason for that entry. So we have this. We're back to 4 hours. And you see that playing out perfectly fine. Okay, very simple. So as always, I want to keep my screen clean. Let's do a forecast into this week. So if we're looking at this week, where will I be interested in shorts? That's what I'm about to show you. I have this. This is the last bull candle there. We had the shift to the downside. We'll have that shift to the downside. So another thing is there's liquidity here, right? Which is also dangerous, right? Because there's liquidity there. Now you have to reference that, but then again, this candle has been used. So if that liquidity is taken, it's crazy because if this level fails, it simply means price might push higher to take that before actually selling, all right? And also, there's also liquidity here, all right? So it's there. You can't unsee it. When you see it, you can't unsee it. It's just there. Or safe again to say, I'm interested in this level. If at all price is going to continue lower, price should not go beyond if we're planning to continue lower. All right. So now let's look at this on the 4 hours time frame. No, I didn't. Let me see. I can't see Daniel on the call. Okay, Digger, unmute yourself. You muted yourself. So the thing is, if you mute yourself, right, you won't be able to unmute until I unmute you again. So in terms of liquidity, this is where my eyes are targeting, right, to the downside. Very simple. This all on the 21 hours time frame. So now let's look at 4 hours. On 4 hours, you see that's an actual shift, right? Yeah. And then there's a shift here for buys, right? You see this shift here. So that's like the last level, all right? Break. I think this is one of the reasons why I was targeting buys. I think I did have buy here. I had buy. And the reason why I'm not still interested in short is because this demand is still being respected. If we look at this level here, this is a demand. So I want to see where this will show. Okay, you see it here, right? So the last bull candle is this. Okay, you see that. Simple. But then on the 4 hours, we'll now refine that into this as the last bull candle before these aggressive candles came into play. So, okay, you see that's inside this candle. And that's why we look at 4 hours as our major level for marking our range. And then what happens? Price comes back to that level, right? Mitigates. Nobody is closing below. There's nobody close below this line. Even if I was to change it to the line, you see it. Everything is above, right? So I'm not still convinced that sellers are in the market. I'm not interested. Now, everybody wants to sell from here. And that's one reason I'm not interested in selling from there again, right? Because you see this level, probability of it holding is only valid if it takes out this low. So let's assume market opens, right? Because that low I just marked is liquidity level. So let's assume market opens and then we'll see the sell side taking first. So if this low is not taking first, this supply would not hold, right? Now, most times, if this low gets taken, people lose hope that price will come back here because they believe, oh, it has been taken. It should just continue like that. All right. So, like I said, patience is the root of this concept. It's as simple as that. Okay. If you can't understand it, you can't understand it. So you just have to learn to adapt and then be patient. Okay. So if we look at this level, let's verify if price actually indeed respected that and we see it. What do you see? You see that there's no body break to the downside. If you are taking this trade, the first one you'd have had a loss, let's say $250 loss, right? But then your second entry, you have recovered. This is a 1 to 3. Did we do 1 to 5? Almost. Let's see. Let's see if we did 5R. No, we didn't. But 1 to 3 played out. This is 1 to 3, yeah. So 250, you make back the loss. So this is basically 750. By the time you minus the first loss, you still have 500 in profit. And then that trade plays out. Now again, like I said, this supply is only valid. I think I even need to put that valid when low. When low is taken, right? It's only valid when low is taken. Valid greater when this low has been what? Taken. This low here. Let me reference that. This level here has been taken. So as always, let me remove the chart and make it clean. Let's look at it very well. So we still have this buy idea, because what do we see here again? We see this, we see that this shift here played out to the upside. There's liquidity here, right? There's buy side liquidity resting here that I need to be taken. And also, I want to reference this level. If you look at this level, I didn't like how that 4 hours candle closed with wicks. So that's the first thing that discouraged me, because I needed to see body. But then it's the next candle that's bringing in the body. I'm like, I'm still not convinced that yes, sellers are in the market. And then there's what liquidity here in terms of trend line. So I want to see price rally back and break all these regions. So I'm interested in buys to this level, mitigate area here, and then sell back down. All right, this one I'm interested in. So just as you can see on the left side, I just want to see this happen. It's actually very simple. See this happen, and then we're convinced that market is still bearish. All right, so on the lower time frame, if I mark out that level, this level, so that you can see, I want you to see it on the 21 hours. What do you see? You see that price is on that week, right? And then there's liquidity resting above. It's not really a valid level, because if you actually want to look at it, this is the last bull candle and it has been what? Mitigated, right? That's the last bull candle, right? It has been what? Mitigated. How am I so sure? Because let me mark out that line. You see it mitigated already. So that's why I said this higher level, you can say is valid if it takes out this low. But then again, if buys are stronger in pushing price, they will push price higher before actually selling. I want to sell at the highest possible point and buy at the lowest possible point. Okay. If I try to chase in between, I would have taken a lot of losses. Just look at this. Market did this from on the 19th of January up until 26th. Right. So that's just a waste of my time. 7 days, a full week ranging. Right. And these are the type of range I hate to trade. All this crazy amount of ranges like this, whereby market is just ranging for a very long period of time. So within this range, you can always look for the range above them or below them to validate your zones, right? Just look for the range above them or below them. Like I've already marked out, I've marked out the levels we should be interested in. So we see this. This is a very important level. All right, this is a very important level to watch out for price, this region. Just to make the charts cleaner. So we'll also reference this. Now let's go into the 90 minutes time frame, like I said. Now, the 90 minutes time frame, what we see here is we see that same level is being respected. And then there's a shift here because there's actual body break, right? There's a shift here, actual body break to the upside. And then in terms of bearish candle, we have this candle to this leg because that's like the full leg. Now, could even go low. And then we'll see wick. Now, you know, this wick is simple, a grab of liquidity. So let me just take out this. Simple grab of liquidity. This was sell-side liquidity taken. Then we'll have our shift here. Okay, we have that shift there. Now, if we go back to 90 minutes. Oh, wow. "90 minutes, we'll have that body. We'll have this week. This week has been mitigated by this one. So indeed, if price is actually still interested in buys, this level needs to be respected. All right, we'll have this level, needs to be respected. So that's like the full level. So if I was to refine it, I will have it as this. And you see that that level also has been mitigated. I just want to see price push up because me, I'm interested in selling at 2050. Anything buys, I might not take the buy, but if I indeed want to take this buy, I need to see this break here. I think that's why I referenced 25.25 on my tweet 2 days ago, where I said I'm interested in 20.25.25 like this. This was the level I marked out. I needed to see body close above, right? Because if I come to 1 hour time frame, there's no body close. 2 hours, 4 hours. You see, there's no body close above that line. So I was interested in seeing what? A body close, right? A body close will convince me that yes, buyers have also taken charge of the market and I'm interested in looking for buys, right? But for now, what you do see here is this level is being respected, right? This level is being respected. This area. So as always, in terms of structure, if you're to identify this structure, what do we see here? We see that market has created what we call impulse correction, impulse correction, impulse correction, impulse, breaks to the upside, fails on the sells, right? Gives a new low. Now I started creating rally, base, rally, base, rally, just like that. So if I was to do that market out again, just so you see price rally to the upside, correction, impulse correction, impulse correction, impulse correction, impulse. Now a lot of buys came in here, failed because it failed to take out this high. And that's why there's still liquidity there, because that's a very important level to watch out for price, right? Before looking for the overall sell direction. Okay, so if I bring back that level, you'll see that what you see here is price moved up, moved down, up, down, up, down, up, down, up. Now give intent because it failed to take out the high, created a low, right? What happens? Another low. Then takes out all these two highs, but failed to take this high, came back, lower high again, just again, creates a new high that fails to take out the second high. So we have two highs that have not been taken out. This and this create a new low. Now this low came to mitigate a demand here, right? Started ranging, accumulation range, gave us a manipulation, right? Accumulation manipulation. So we're expecting expansion to this upside. If I'm convinced that yes, market is going to continue buying. All right, because if you look at it, where did this reaction come from? So if I was to mark this level, let me just bring this. What do you see? You see that that reaction came from this demand, right? This low here. This our last bearish candle, right? That's where the reaction came from. And then there was a sell-side liquidity that was already taken first. So liquidity did play out here. And then before you notice, you see that there's also a buy here that happened, right? So this buy happened. So you have that. I'm about to step up, so I need to be fast. So you would have this. Okay. So what do you see? Price mitigates the 50% of the second leg, the main threshold, and you have your 1 to 3 around this level, right? This month was actually a very negative month. So let's see how market is going to react off these regions that I've marked out. I still have my eyes on this high to be taken. So I'm interested in looking for buys to that level. Like I said, I'll get my buy confirmation when I can see a body break. right? Because this level is quite tricky also. Price can do this and then start selling, but for me to be convinced, once I have that body break, I can look for buys into this level, right? So I think I want to see this happen during London session, give us that body break to the upside. I don't really buy weak break of structure. So the only break of structure I've seen was on the 90 minutes time frame. And that was when we had that body to the upside. So there was a shift in market direction back to the upside. And then we have that low. So worst case, if market will also want to retest, is to see price come into this low, 2011, and then give us a body break. We can look for entry all the way back to 2050. So if there's no body break above this line I've marked, I'm not really interested in buys. And then for shorts, you still want to wait. Now, like I said, I will only reference this level if this low is taken. So if this low is taken, then I'll be interested in this high here. Okay, so let me bring back the time frame. So if that is taken, let me just, why can't I see it? Okay, now you can see it on that week. I just need to see it on the other time frame. So when that happens, I'll be interested only if this low is taken. So this low is taken. Then I'll be interested in using that as my sell level, right? So that's my thought process for this coming week on gold. I just want to see a break. There's no actual body break, right? So we want to see the body breaks. That's what will confirm that, yes, this is actually valid, right? Because this leg has created this high, it needs to create this low. Failing to create that low and creating this low here gives us indication that price will raise this level, go higher before actually coming back down. All right. So I have to stop the recording first and then okay, let me stop the recording.